We were looking at the following analysis question. The directors reduced the long-term liability. Was this a wise decision? And we had to obviously explain. So I've explained most of the reasons already. The gearing improved. The debt equity ratio, obviously the business is now low geared. Return on total capital employed is now positively geared. It's higher than the interest rate. So those are all favorable in terms of paying back that loan. And then finally, one last reason that I want to quickly mention as well is your earnings has increased. Right, so what do I mean by that? So if we go back to our information, and I'm looking at information D, right, where you've got your financial indicators. Okay, sorry, not information D. Okay, I'm looking at information C. Now, if we look at our earnings per share, in 2008, guys, our earning per share was 135 cents. In 2009, our earnings per share is now 189 cents. So clearly we can see earnings per share has increased. Now, how does earnings per share increase? Obviously, if you borrow less, you are then paying less interest. So if your interest decreases, your profit, guys, your net profit is now going to increase. So that could be another reason that you could give as part of your answer. Okay, you guys with me? Right, so let's now move on to the next analysis question. And the next one wants us to look at, so I'm looking at, right, this particular question here. Comment on the return on shareholders' equity. So I need to comment on return on shareholders' equity. I also need to comment on earnings as well as dividends. So earnings, right? So obviously looking at EPS as well as your DPS, dividends per share. And as usual, I need to quote evidence and figures from the information that is given. Right, so let's do just that. Let's now comment on return on shareholders' equity. So we're going to our financial indicators that is given to us. Okay, so if I look at, there's my return here, guys. Return, percentage return on shareholders' equity. 2008, my return was 21%. 2009, it's 26%. So I just want to write that down quickly. Okay, so 2008, my return is 21%. Okay, 2008. And in 2009, the return, let's just fix that, 2009, the return is now sitting at an amount of 26%. So I just want to fill that in. Okay, my return, 26%. Right, now what does this mean as a shareholder? So clearly my return on shareholders' equity has increased. Okay, so I'm going to mention that as part of my answer. My return on shareholders' equity has increased by 5%. I'm obviously looking at the difference last year compared to this year. As a shareholder, I am going to be satisfied, guys. So as a shareholder, okay, let's just put a happy face or a smiley face. I am going to be satisfied with this return. Now, what does this mean for me as a shareholder? Why am I satisfied? Because this return is significantly higher than the rates offered by the banks. So remember, I've got a lump sum of money. Let's say, for example, I've inherited 1 million rand. Right? I could then take that money and invest that money in a fixed deposit. Now, the banks will probably give me 6%, 7% if I'm lucky. So that is the return that I could get from the bank if I put my money in a fixed deposit. But by buying shares, my return is 26%. Okay, so you need to mention that this return is higher, okay, is much higher than alternate investment. okay, alternate investment, and you can obviously give the fixed deposit as an example, as your alternate investment. Right, so return on shareholders' equity completed. Now let's look at your earnings. Right, so again, if I go back to my information that is given to me, my earnings per share, we spoke about this earlier on. So your earnings, 135 cents. Let me just rewrite that. So 135 cents in 2008. 2009, my earnings per share is now 189 cents. Right, so once again, guys, as a shareholder, I'm smiling. I'm absolutely pleased with this increase because it means that my earnings per share, since there's an increase in earnings per share, I might end up with more dividends per share as well. So remember, earnings per share, the maximum I can give my shareholders. Remember, no company will give their shareholders all the profits. Obviously, you would like to retain some of the profits in order for the company to grow in the future and make more profits. Right, so my earnings per share, okay, again, guys, please remember you're going to have to quote these ratios, and I wrote it down on the previous page, but you can simply mention earnings per share, EPS, you're allowed to abbreviate, is higher than the previous year. So 2009, let's write that properly, is higher than 2008. And remember, quote the earnings, the ratio. And again, as a shareholder, I am satisfied with this investment. Right, and then finally, dividends per share, guys. I'm just looking at how much of time we have. We've got a bit of time left. So my dividends per share, if I go to my dividends per share, I just want to quickly erase something because there seems to be writing all over the place there. So there we go. I think we can see this now. Right, so my dividends per share, if I look at 2008, my dividends per share is 105. So I just want to write that down. Okay, 105 cents. And in 2009, my dividends per share is now 72 cents. Okay, so how do I go about interpreting this? So clearly, my dividends per share, there's been a decrease. Okay, so if you compare last year to this year, just quickly look at that. So this was 2008. And if I compare that to 2009, I notice that there is now a decrease in dividends per share. Now, how do I go about explaining this in my answer? So remember, guys, as a shareholder, obviously I want a higher dividend. But it doesn't mean that if the company is not giving me a big dividend, it doesn't mean that as a shareholder, I'm now going to be unsatisfied with my investment. It could be the complete opposite. So what do I mean by this? I'm going to use 2009 as an example. So I just want to write here so that I have a bit of space. Right, so if I look at my EPS, my earnings per share in 2009, it was sitting at 189 cents. My dividends per share in 2009 is sitting at 72 cents. So clearly the company could have given me more, but they chose not to. Now, what does this mean? It means that the company is now retaining profits. Okay, so they are holding back on profits. And let's look at how much the company is holding back on. So I want to get the calculator out. Let's just quickly move that. Okay. All right, so it's fine, guys. Let's just quickly try that one more time. Okay, it's not a problem. So 2009, sorry, so 189 minus my dividends of 72 cents, and the company is retaining 117 cents. So I just want to write that down. The company is retaining 117 cents. Right, so how do I go about answering this question? I am going to mention that the company has obviously decreased dividends per share. Okay, so part of my answer, right, I need to now state that dividends per share, let's just get a pen out again. So dividends per share has decreased, okay, from 2008 to 2009. Okay, however, the company is now retaining, okay, they are now holding back or retaining additional profits. Okay, and how much is the company retaining? 117 cents. Now, how is this helpful? In the future, that profits can be plowed back into the company. So remember, the more profits I save, the more profits I end up making in the future and a higher dividend in the future. Okay, a very simple example could be you receive a monthly allowance from your parents. Just as an example, let's say your parents give you every month 200 Rand. So your parents could tell you, we will give you every month 200 Rand, right? So for the year, obviously, if they give you 200 Rand each month, you'll get 2,400 Rand for the year. Or they could tell you, we won't give you 200 Rand each month, but at the end of the year, we'll now give you 4,000 Rand. Right, so immediately you now need to think, can I sacrifice not getting that 200 Rand per month? Right, can I do without that money and wait for the end of the year where I'm now getting double the amount of money? So a similar scenario here, guys. So the company is now retaining more profits, and this could mean more dividends in the future. Okay, right, so hopefully that made sense. Let's now look at our very last question on ratio analysis, and let's see if we have any time left over. I doubt we will. Ratios is quite a long section, but I think whatever we covered today was absolutely important. Right, the last question on this particular topic: the existing shareholders are unhappy with the price at which the additional shares were sold. Discuss quoting one figure or financial indicator to support your answer. Right, so your current investors are unhappy with the company for selling additional shares at a specific issue price. So let's go and see what that issue price is first. So if I go to additional information A, my issue price is 6 Rand 30 cents. Okay, so I just want to write that somewhere quickly. So let's just quickly find a bit of space so we can actually write that down. So I've got an issue price, okay, and my issue price was 6 Rand 30 cents, okay. And let's now look at why the shareholders are unhappy with that issue price. So if we go to your net asset value per share, guys. So your net asset value, last year my shares were worth 6 Rand 87 cents. So again, I just want to write that down. Okay, so last year shares were worth, okay, so net asset value, okay, 2008 was 6 Rand, I think it was 87 cents, but we'll check that again. And now let's look at what the price was on the JSE, okay, the Johannesburg Stock Exchange. So on the JSE, if I look at the price of my shares, on the JSE, the shares were trading at 6 Rand 80 cents. Okay, there we go, 6 Rand 80, and between 6 Rand 80 cents, so between 6 Rand 80 and 7 Rand 80 cents. Right, so as a shareholder, why am I unhappy? I think I can answer this here because all the figures are here. So I want you guys to just focus on this end of the screen. Okay, so if we look at the issue price, guys, the issue price was 6 Rand 30 cents. So clearly, as you can see, the issue price was lower than the net asset value as well as the JSE price. So remember, the JSE price, what the shares are trading for on the stock exchange. So when people or other investors are selling their shares, they are selling it between 6 Rand 80 and 7 Rand 80. Right, the shares are worth, and I'm looking at 2008 price, the shares were worth 6 Rand 87 cents. So clearly the issue price is much lower than the JSE. So your current shareholders, this issue price has basically decreased the price of the shares. So remember, instead of buying the shares from the current shareholders, a potential shareholder might say, I might as well buy the shares directly from the company. Okay, so that is one of the reasons why your shareholders would be unhappy. Okay, I hope you guys understood that. The issue price is lower than the net asset value as well as the JSE. So when you do issue shares as a company, you should issue it at a price that is more or less closer to the net asset value, probably not as high as the JSE price, but as close as possible to the net asset value. Okay. Right, so unfortunately guys, we don't have time to do stock valuation, but that will come up during the course of this week. And if we have time, we'll look at fixed assets, because we did look at it last week, but there were so many questions, I was unable to get to all the questions. So remember guys, ratio analysis, please make sure you can calculate all your ratios correctly, because those are easy marks. And again, please make sure you can interpret the calculations exactly the way I did in this particular question. Remember, the more you practice, the better you get at the section of work, and it's obviously not difficult. Right, unfortunately, we have run out of time, so it's time for me to say goodbye. Thank you once again to our sponsors, Liberty. And please, guys, remember the Tenfold education app is something that you need to download, because obviously that's going to assist you. Continue sending your questions, and I'd love to assist as many of the mindsetters as possible. Guys, please be safe during this time. Continue washing your hands, continue using hand sanitizer, and remember, if you are going out, please take the necessary precautions. From me, Mahesh Lal, it's goodbye, God bless, and take care, guys.